Okay, I'm gonna do my daily review. I'm gonna start with the monthly today since we're ending our monthly candle today. I mean, we have like another hour in it on the futures market, but I'm gonna go ahead on and start with the monthly. With ES, the S&P, the monthly, as you can see, we wicked right after we hit this previous resistance level, and we just came right up after we hit that. It's just a nice wick candle where we heavily resisted going underneath this level right here. That's obvious. A lot of people would look at this and say this was a very bullish candle because of this big wick, and some people will call it a hammer. Uh, and it could be. I'm not really big into stuff like that. As far as trading it, it could be bullish. But yeah, that's what ES is looking like on the monthly. Um, we did the weekly already, so I'm just going to go straight to the daily on ES. All right, so today on ES, we almost got to the 50-day moving average. We thought we went down. We were going down after GDP was reported. We headed down and we got down to the 20-day moving average. This red line, we got there, and then we just came right back up. We had a nice wick. Again, this is just like that monthly candle. A lot of people will call this bullish. It's a hammer candle because there was this huge tail, which says that this was a pretty good rejection of this level. So it looks like for now the S&P does not want to get lower than the 20-day moving average. Right now we want to be higher than that, and this candle shows that right now. We didn't quite get up to the 50. I think the NASDAQ did, but I'm not. I have to look at it. I believe we did though on the NASDAQ. So right now it looks bullish. If S&P is gonna go to that 50 or go to the 200, I don't know. But like I said, once I saw that the weekly candle was higher, had made a higher high, I said I'd be bullish until we get to around this level between here and here. I'm bullish until here and here, and then for me it's just wait and see. All right. Okay, now I didn't trade ES today. I only traded gold. But on the hour on ES to start off the day, like I said, we were bearish. We were just heading down. This was Tuesday's high. This green line and the red line was Tuesday's low of the day, and we got below the low of the day. These blue lines are my opening range. I only like to trade if we're outside of that range. We got below the range. We had a really nice fall down to, like I said, we hit the 20 on the daily, and we bounced right off of that and never came back. That was it. I didn't watch ES that much. I had a lot of yard work to do today. So once I got what I wanted to do, I kind of went outside and did what I needed to do. But yeah, we looked bearish. And then let's see, right here, this candle here, we closed above the 20, above the 50, and above the 1 hour range. Looks like we came back down to this, and then we came up and we got green today because we got moved higher than yesterday's high. So let's go to the 5-minute on ES. Like I said, I didn't trade ES today. I only watched in the morning, and I saw we're just going down and down and down, and I didn't take it. But on the 5-minute, once market open, this was before market open, we kept falling. After market open, let's see. What is this? Hold up a second. Well, let's just do this. Once market open, we were already oversold, so I didn't feel comfortable getting in. But as you can see, we just continued to fall down. We just continued to just fall and fall and fall. There was an opportunity to get short here if you were willing to short already oversold market to go here. That would have been a good trade. And then right here, we got above our opening range, and we also closed above the 20 bar moving average. This is all on the 5-minute right now. And we just kind of chopped right there for a bit. We just chopped. But this, I would anticipate a long occurring here, but it's hard to get in with the chop because you're not sure we could fall down. But the fact that we closed over the 20 and we got above the opening range, it's pretty positive. And also we have the bullish cross of the 5 EMA over the 20 EMA. I don't like to go long until actually we cross over the 50. So, but this still would have been a good trade. We got over the bottom of the opening range. We kept retesting it, and we couldn't close back underneath it again. We couldn't get we closed above the 20 EMA, and we couldn't get a close under it after we closed above it. We kept wicking right back up. So this was definitely a bullish signal right here. We went up, we closed above the 50, we came back to the 50, and that could have been a nice long taken. And this was prior low, and we kept coming back to it. We kept coming back to prior low to retest it. And each time we come to it, we rejected it and came back up. And it looks like the 200-day moving average was being resistance at the time. It looks like we got to the top of that 1 hour opening range, and we went right back down to stay right in this range. And then we, towards the end of the day, it looks like this is the final hour. Yeah, this is after 2 Central. We popped above the opening range, and we got above prior high. So for me with ES, the only trade I would have had was if I got in here, because we did go under it. We didn't close. We came back above it, and I could have just got back in going down. But like I said, I was a little bit apprehensive about shorting. I already oversold market. But yeah, that would have been a good trade, or getting in here after we had this green candle. I could have got back in short here, and that would have been okay. That would have been a $500 scalp if I'd have got in there. But again, I was kind of worried about, selling an oversold market. I'm trying to follow my strategy to the T. This would have been a nice long, but I would have had to wait until we get over the 50 on the 5-minute before I would even think about going long. But the problem is that this was all happening in the opening range, which means this is not trending. This is just kind of going sideways, which is what it is. And I really wasn't supposed to take a trade until we popped and closed over this opening range, which was after my time to watch. So I didn't trade ES today. This here in the middle of this the opening range is not really my price action. It's not the type of price action I really like, although I could have easily taken some trades that would have worked out just based on the fact that we were in a bullish situation, at least until the 200. But if I want to make sure I'm taking A+ setups, not trading in this range is probably best for me. This one would have been a nice one if I wasn't a little bit frightened to sell and this one would have been good. But anyway, so that's how I've been trading lately. I didn't take any of the ES trades at all. But we're looking bullish right now. We've been making higher highs on the daily, and we've got that nice wicked candle on the monthly. So looking now, we're bullish on ES. It's just we just gonna see if we get a reaction when ES hits the 50 of the 200. Okay, now let's go to NQ. NQ on the monthly. I'm sure this all looks the same as ES. The same as ES. We hit that prior resistance level, and we wicked up really, really nicely. And we actually closed above the 20. We got below the 20 bar moving average, but we closed above it. We didn't stay below it this month. We got below it and just wicked up really nicely. So this is very nice, that candle. Okay. All right, looking at the daily on NQ, like I said, yeah, NQ went to the 50 day moving average. We have the bullish cross. We actually had a close above the 50-day moving average. There's a level here that was prior support that may block it, and especially when it's along the same line as the 200-day moving average. Like I said, a lot of people believe that we're going to possibly go here and we should get a negative reaction towards when we hit this death cross, But like I said, I don't like to predict. I like to just react. Right now, we're looking bullish. I probably wait and see right in this area, but we're looking bullish right now. And another thing that's bullish is like the same thing on ES. We did not want to close below the 20. Once we got to the 20-day moving average, we just shot right back up. Was not an area we wanted to go under. So that also looks pretty bullish. Okay, I'll go over the hour on the NQ. I'm not going to do the 5-minute because it's pretty much the exact same as ES. So yeah, we were bearish at the opening of the day after GDP, and then we just got bullish. That was it. So this candle, which was very bearish, confirmed the cross of the 5 under the 20. So this was a very bearish candle. And like I said, if you were okay with shorting an oversold market, because we got pretty oversold, this would have been a good opportunity to get in. Once this candle closed, we had a pull up towards the end of that hour. We got up and then easily could have got in right here and took that short. That would have been a good trade. This would have been a good trade, but it was after my time of trading because we had gotten over the opening range. We came down to hit the 5 EMA. After we popped above, we came back down because we wicked on this candle and we continued to fall down to here. And then this would have been a good trade going up on NQ, which is the exact same as ES. We got above yesterday's high and ended the day green. All right, gold. I did trade gold today. I'm going to go to the monthly. And gold was golding all month until the end. As we can see, gold's been just making higher highs. It hasn't been resting a whole lot. But at the end of this month, we can see a really nice wick down. But we kind of had this is what a lot of people will call an indecision candle. We had a wick down, we had a wick up, so it's kind of an indecision candle for the month. So next month is who knows, are we going to, because with this wick, we can see the bears showing up, but with this wick, we can see the bulls pushing it up. Will we get to a point low enough where we have to get to a point where there's more selling than buying? So we need to see on the weekly, we need to start seeing lower lows. Okay, so this was the low of last week. I would want to see a close below this. This was on the daily, if we see, look, this was a previous resistance level that we broke, and it's being support right now, along with the 20-day moving average. We got this level and the 20-day moving average as support. Those are levels I want to see if gold can break. If we can break those two levels, we may very well go to the 50-day moving average. But we're definitely showing weakness in gold right now that we haven't seen in a bit. But we shall see. Because as far as the daily is concerned with gold, we're just in a range. We've been trading in this tight range. And let's go to the hour. Okay, for the hour, this green line was yesterday's high and the red line's yesterday's low that I marked off. Okay, starting the day off early in the morning, we were bearish. I believe this is the Yeah, that's a 7 o'clock candle. We just shot up. We shot up and we just kept shooting up and kept shooting up. We hadn't had the cross yet. We hadn't had this 5 at this point. We did get it. But then as you can see, we didn't have anything want to close above the 50 bar moving average, this purple line. We get there, get over it, and then we just keep falling down, falling down. So this purple line, or the 50 bar moving average, was definitely resistance today on the hour. We can't get up to the 200 because the 50 bar moving average is resistance right now on gold. But right now we've just been ranging. We've been ranging. Once we got, this was all-time highs. Once we dropped from all-time highs, we got here to that prior resistance level, and we've just been ranging. So right now we hit the 50 and we fell down. So what I took today is I took a short. Let's see. All right, it was a quick short. I just barely got it. All right, so, okay, we started off the day below yesterday's low, and then we shot up, got above this red candle, which was yesterday's low, and at first that was resistance for a bit, and we popped above it, came back down to the 200 or back to that level, and then we got back higher, and we got high, and some people say we took out London's high because London's high was like right here. We grabbed the liquidity from London's high, and then we started going lower. I don't really pay attention to the liquidity stuff, to be honest with you, but some people do. But anyway, we did shoot over that, but I wasn't looking for longs at the time because on the hour we were still looking bearish. So I was looking for a bearish setup. We have formed our 1 hour opening range. This was the top and this was the bottom of the range. So I'm just waiting to see if we're going to have anything break out of this range, or else I was not going to trade at all today. But we did. I thought we were going to go lower, but we didn't. I saw these 2 big red candles. We went down really fast. Then we came back up to hit. This blue line is the opening range, the low of the opening range. This red line was the low of yesterday. So we went below both. Then we came back up and hit yesterday's low. And I got in right at the bottom of the opening range. That's where I got in. And I figured I was going to take a really quick scalp to the 50-day moving average. Because I figured, we may get some type of resistance there or support there. But to be honest with you, I was actually thinking that we were just going to keep going lower, could possibly continue to go lower. But I got in right at the bottom of the opening range and took it to the 50-day moving average. And I got like almost $400 for that. And I was happy. I was done with the day. But then I saw we had popped back up. I'm like, oh my God. I'm glad I got out there because we did not continue. We did not continue downward. We came back up, and then we just stayed in this range. For me, this is not really tradable. I mean, I could take certain scalps here and there, but they're not the greatest. They're not the greatest trades for me, for my style. There's this trade here. At the end of the day, we got below the opening range, and we came and retested it. And I could have went short, but I wasn't watching at that time. So that was my only trade of the day, was that trade, and I was done. So yeah, I got $390 for that, which wasn't bad. I was okay with that. All right, let's go to crude. All right, on the monthly, we just see crude, this big red candle. We're looking bearish on crude. Like I said, when I did the week review, we definitely look bearish. I should have taken a short. I got a signal to get in short with USO, which is the option you can take to trade crude. And I got the signal to go short. I got distracted. Never did get the put. I was going to get a put. But anyway, I definitely would have won off of that one. Yeah, so the month looked bearish. It's just, we broke out of this, which held it for so long, and we just broke out this month. All right, let's go to the daily with crude. Okay, the daily on crude, we're making a low. And I had my alert set to let me know if I wanted to see a lower low. So I took the lowest of this, which was here, and I had an alert to let me know when we got lower than this. And I got that alert yesterday, and I didn't get into the contract. Look at this. This would have been nice. This would have been a nice short. I probably would have gotten at least almost 40, at least 40% if I had held. Anyway, so crude looks bearish on the daily. We're making lower lows now. The question is, do we go back? Let me go to the monthly again and hit this level, because this is the only other level that we can see once we broke this. The only other level we see is this. Like I was saying before, I was watching some guy's review, and he thought that, well, this is the only level and we may go here. So I don't know. I mean, that's a long drop down, but you just never know. We could. Okay, I got a phone call. Let's see. So the hour on crude, we're bearish. We look completely and utterly bearish. Let's see. That was the 7 o'clock candle right here. So this was the 8 o'clock candle. So our opening range was between here and here. And this candle, we broke out of that opening range, and that's when I could have went short. When we broke out of that opening range, which would the only thing you're looking for in this is just shorts. So according to looking at the hour, but look at this, we just dropped and dropped. That was, we had crude inventory. I wonder if this had something to do with crude inventory. We had crude inventory came out today because we were just consolidating right here. This is 8 o'clock or 8 o'clock central. So this is like the 8:30. Like we fell. And then once we formed our opening range, it looks like it's right here. And you would have just had to jump in. If I wanted to take this, I would have had to just jump in short right underneath here, the opening range. But we had a pullback right here. We came up with this candle. Could have got in and taken that short. I haven't been trading crude, but this would have been a good day to trade it. And just take every short opportunity you see until the end, until it closes, I think, at 1 Central. So then we just lost volume. But yeah, just every short. Right here was a short. We closed above the 5 EMA, reset the RSI a little bit, and then we had a close below it, pull back up to the 5 EMA, which we did, and then that could have been taken short. That would have been a nice short. Yeah, crude would have been easy to trade today. I would have had to jump in here, but like I said, we did get this pull up, so that would have been a nice opportunity to get in. Yeah, I believe this has something to do with crude inventory, because that did get reported today. I don't know what the results were, but they did report crude inventory. So yeah, right now, crude is very bearish. That's it for ES and the indices that I watch. Right now, I'm just waiting to see what we do as far as, because I want to see us get over the 200. I'm not buying any. I'm not getting, I want to buy a long contract to hold for a while, but I wouldn't do that until we got over the 200-day moving average on the daily, on the indices. In gold, I am definitely willing to take a short if the buyers do not step in and we get below the 20. If we get a close on the daily below the 20, I will definitely be looking at getting a GLD put, because it's about time for gold to take a break. We had a really good run up. And crude, I was late to the party. I'm so focused on day trades. I just haven't put the energy into my swings. When we broke this, I should have taken that short. I just should have jumped in without hesitation. I just should have went and got it, and that would have been nice. But anyway, that's it. Tomorrow again, I have PT, so I've had to go grocery shopping. I got to do errands after PT. I probably won't do a review. This was the last of the month, so I did good this month. This was my second most profitable month, so I'm not mad at it. Even though I had a red week, I still had the second most profitable month. So let's see what next month, what May's talking about. All right, take care. Bye-bye.